Welcome back to Dinar Community Channel. Inside a closed-door meeting held this past week among senior banking executives from J.P. Morgan Chase, Wells Fargo, and KeyBank, the discussion surrounding the Iraqi Dinar IQD exchange program revealed critical developments that could reshape how American banks handle foreign currency redemption, especially in light of recent global monetary policy shifts. The contents of this meeting, once considered speculative and heavily shielded from public discourse, are now becoming part of a growing, undeniable reality. U.S. banks are actively positioning themselves for a structured exchange of IQD, and possibly other currencies such as the Vietnamese dong VND and Zimbabwean dollar ZWL under very specific and deliberate frameworks. According to insider reports from individuals familiar with the meeting's agenda, the tone was no longer dismissive or skeptical. Instead, it carried a tone of readiness, security, and coordination. Chase Bank, in particular, has shifted from passive awareness to active structuring, with its senior foreign exchange team acknowledging that select locations across the U.S. have been undergoing quiet preparations to facilitate private redemption appointments for qualified clients. This change came after months of internal review, consultation with compliance officers, and discussions with Treasury and Federal Reserve liaisons. Wells Fargo, long rumored to be connected with exchange-related logistics, especially through its wealth management division, confirmed during the meeting that specific client advisors had been briefed on how to prepare high-net-worth clients for possible exchange events involving IQD. While the bank has not made any public statement regarding Iraqi dinar redemption, internal documents referenced during the meeting outlined protocols for customer verification, high-security cash handling, non-disclosure agreements, and appointment-based processing, particularly in high-population metro areas such as Houston, Atlanta, Los Angeles, and Miami. Meanwhile, KeyBank, although smaller in national footprint compared to Chase and Wells Fargo, is reportedly playing a surprisingly pivotal role. Sources inside the meeting noted that KeyBank has been actively involved in pilot exchange programs, operating behind the scenes with international partners. They are said to have leveraged their regional branches, especially in Ohio and the Pacific Northwest, as test locations for internal system trials. Some client service managers were given training modules labeled FX Event, Tier 1 Currency Response, which were heavily restricted and only accessible to a select group of financial officers and currency specialists. Perhaps the most striking element from this high-level discussion was the clear coordination among these three financial institutions, banks that typically operate as competitors. What emerged was not just individual readiness, but evidence of a synchronized posture being taken by all three, likely driven by federal or multinational regulatory direction. An executive from Chase reportedly said, "We're not operating in a vacuum. There is a uniformity of purpose now. No one wants to be caught flat-footed." The driving force behind this convergence appears to be a combination of geopolitical pressure, post-conflict economic stabilization initiatives in Iraq, and evolving IMF guidance. While many within the banking world had once scoffed at the notion of an Iraqi dinar revaluation (RV), that stance has shifted dramatically since early June 2025, when major monetary policy signals began leaking through alternative economic channels. This includes sudden increases in Central Bank of Iraq reserves, elevated interest from foreign institutional buyers, and quiet revisions to IQD's positioning on private FX trading platforms. Chase's representatives confirmed during the meeting that they've begun working with digital onboarding solutions that can support immediate Know Your Customer (KYC) and anti-money laundering (AML) compliance for IQD holders seeking appointment-based redemptions. This includes biometric verification, account-level tracking, and optional integration with Chase private client portfolios. One executive described it as an intelligent firewall. "We want to identify and protect legitimate clients while eliminating speculative traffic." Wells Fargo took a slightly different route, emphasizing education and readiness within their wealth management ecosystem. They disclosed in the meeting that asset protection specialists have been briefed to start advising clients on what to expect post-exchange, including tax liabilities, trust formation, and liquidity management, without directly guaranteeing the occurrence or timing of any redemption event. Their advisors were warned, however, to avoid making claims or promises about IQD values or future returns, emphasizing compliance and caution. KeyBank's surprising presence and influence in the meeting revolved around their regional intelligence. One bank source stated, "KeyBank has been on the ground floor, testing the playbook. Their low-profile status made them the perfect candidate to conduct operational rehearsals, especially in markets where attention is lower. Their strategy has included coordination with third-party armored transport providers, secure redemption rooms, and high-level IT testing of system integrations between foreign exchange desks and central reporting portals. Beyond the logistical and operational details, the meeting also delved into the psychology of the investor community. Bank executives expressed awareness of the decades-long speculation surrounding the IQD and acknowledged the responsibility banks bear to mitigate chaos and misinformation. A Wells Fargo executive reportedly told the room, "We need to serve clients ethically, protect them from scammers, stabilize their expectations, and guide them through what might be the most dramatic financial transaction of their lives." Concerns about fraud were high on the agenda. All three banks shared incidents of attempted counterfeit IQD notes, false currency certificates, and fake appointment letters. Each institution is now working with federal and international enforcement partners to verify note legitimacy and to track criminal networks operating fraudulent redemption schemes. Security protocols were extensively discussed. Chase outlined a three-tiered client intake strategy that includes invitation-only redemption windows, security escorts for high-volume clients, and real-time verification against internal watchlists. Wells Fargo emphasized its off-site wealth hubs as possible locations for processing redemptions away from traditional branches. KeyBank, meanwhile, indicated that some exchanges could be facilitated within their private banking departments under closed-loop authorization, a process that allows currency exchange only after the client's full identity, account standing, and currency provenance have been confirmed. Another topic that dominated the meeting was public communication, or the lack thereof. Despite all the internal preparations, none of the banks have released formal public announcements about the IQD exchange process. A Chase director made it clear, "This is about readiness, not headlines. When the time comes, we'll notify the right clients through secure channels, not Twitter." Still, pressure is mounting. Currency holders across the U.S. are growing increasingly aware of shifting financial signals, and many have already begun visiting branches, asking informed questions. Bank tellers and branch managers, according to reports, are being trained in how to de-escalate inquiries while quietly escalating legitimate requests to internal teams. This delicate balance of silence and readiness is a tightrope walk, but one the banks appear increasingly prepared to manage. International observers, especially those in the IMF and World Bank, are said to be monitoring these developments closely. A source familiar with the IMF's regional currency stabilization program stated that U.S. bank cooperation will be essential to maintaining orderly capital flows once the IQD adjustment begins. Any misstep could destabilize investor confidence globally. In terms of exchange value, no bank offered a projected rate during the meeting. However, analysts within the room referred to figures that have been quietly circulating in financial circles, rates between $3.40 and $6.20 per IQD depending on tier level, redemption type, and client status. These numbers were not confirmed but were treated as plausible for modeling purposes. Interestingly, each bank also shared contingency planning frameworks for what happens post-exchange. For Chase, this involves expanding private client services to accommodate sudden inflows of capital from newly liquid clients. For Wells Fargo, it's about integrating new clients into their trust and legacy planning programs. For KeyBank, it's focused on maintaining compliance integrity in mid-market branches that may suddenly receive high-value traffic. The meeting concluded with a strong message: be ready, be discreet, be secure. Though no specific date was committed to, every executive in that room understood one thing: the shift from rumor to readiness is complete. These banks are not just considering the Iraqi Dinar exchange, they are preparing for it. In the coming weeks and months, IQD holders may see signs, subtle and indirect, of this preparation unfolding. They may notice increased privacy walls in branches, unusual updates to online banking platforms, or private calls from wealth advisors who once ignored the topic entirely. They may encounter locked doors and private meetings. They may receive, for the first time, real instructions. But what's most telling isn't what's said publicly, it's what's happening behind closed doors. And if this week's meeting among Chase, Wells Fargo, and KeyBank is any indication, then the financial world is closer than ever to an event that, once considered a fantasy, is now being handled as a reality. What matters now is preparation. Not panic, not rumor chasing, not overpromising. Banks are taking steps, quietly, carefully, strategically, and if their level of coordination is any clue, the currency revaluation era, at least for the IQD, is not only real, it's already underway. Like and subscribe for more videos.